She see I'm famous. I see them niggas. They know I'm rigging. See my car parked up. Don't try to race it. 222. It hurts sometimes. It hurts sometimes. Yo. Alright, ladies and gentlemen. 2. Another masterpiece. But that money still been moving. Man, move it up into the suits. These gave a nigga fucking goose. Ain't no more fucking excuse. This dumping niggas want to deuce. And them cracks man tell nooses. It's even nigga. Alright. We're fucking live, boys. It's fucking Money Buddha. Hottest fucking day trader. Fucking get my fucking chair. Fucking sit in the goddamn chair. Not fucking juice. Alright, boys. Ladies and gentlemen. Let's see what we sound like on this motherfucker. Oh. Alright, there we go. Let's get it back full fucking speed. Still a little low, but we'll take it. Let's see what happens if I do that. 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 There we go. This is the Money Buddha. There we go, man. We got some proper feed, man. That way I don't have to fucking scream at you all like I'm fucking crazy. Alright. So it's a new year, man. Ladies and gentlemen, boys and girls. Yeah. There we go. Yeah, man. Happy New Year, everybody. It's the Money Buddha. Go crazy. Go crazy, girl. Girl, that's him. Is that him, girl? That's the Money Buddha. Money Buddha. Let me turn this brightness down before I go blind. Oh, yeah, man. I like that shit, man. We just had to change a little bit of the settings. Man, so let's see what the market is talking about, man. New year, man. 2023. Best stock picks 2023. Let's see what they talking.
Oh my god. They trying to get a nigga to. Oh man, I'm about to not fuck with y'all no more, man. I don't like that. They starting to get bougie. 2021 already. Niggas starting to get niggas getting bougie. They trying to get bougie with their little stories. Nobody tripping. I see what Baron talking about. Yeah, see, they slick with that. They trying to have a nigga get stuck. They trying to catch a nigga with the fucking, hey, they get $1 per week. $1 per week, that's $4 a month. You know what I mean? $40. Yeah, I mean, that'd be fucking $48 a year, nigga. Let's see what they talking about on FemViz. It's a new year, barely nothing. As I say, there's nothing on here. Ain't nobody doing no tickers. Let's see, man, what we want, man. I like this one, boys. Hold on, holy shit. Aim, baby, aim. Aim immunotech. Hey, hold up, nigga. What you, oh, it's a sign. It's a fucking sign. It's a sign, bro. All praises to the most high. Hold on. Oh my god, it's a fucking sign. Oh my god, it's a fucking sign. Oh my god, it's a fucking sign. Oh man, it's a sign. It's a fucking sign, bro, from you, Milan. Oh my god, it's a sign. By fucking aim immunotech. Oh my god. It's a fucking sign from the heavens. Give me a sign. I know this company. Ain't me no farmer focused on developing there. What the fuck? Oh my god. Oh my god. I can't right now. I can't with you people right now. Oh my god. Oh no, I don't. Oh, I'm gonna faint. Oh, oh, it's a sign. It's a sign. Oh, it's a vibe. Oh, the night. It's a vibe. 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 Oh my god. Oh my god. Oh yeah. I can't even read this. This is our story. This is us. The fires of Mount Doom, Lord on. It's almost ready. We are almost ready. It's a vibe. Oh, the vibe. It's a vibe. It's a vibe. It's a vibe. A vibe. It's a vibe. I'm just gonna leave that there. I can't even with you all right now. It's a vibe. All time lows, and it's a vibe. It's a vibe. It's a vibe. Oh yeah, buy all of this shit. Oh, these are all the stocks you're supposed to be buying right now. It's a vibe. It's a vibe. Oh my god, all my shooters. Another one. Oh my god, it's a sign. Oh man, my shooter can't miss. Is that a new pair of Louis from Vic? Oh, my dick, I shit. and your girlfriend likes my drip. Oh yes. Happy birthday to that bitch. Oh yeah, there it is. And you know I cannot slip. Hey, Frank Miller mink all on my wrist. Frank Miller mink all on my wrist. Hey, AP mink all on my wrist. Got a million on my back. New Patek on my wrist. Let me stop before I get fucking copyrighted for that shit. No, go ahead and go get a mink. That's that. Ooh, and my new Patek on my wrist. White diamonds, them shits is pink. Now go ahead and go get them. Nah, motherfucker. Now I got that shit stuck. That's my song. Tell a bitch go get me my grapes. How you deal with all that hate? Yeah, Money Buddha, how you deal with all that hate? Tell a bitch go get me my grapes. Don't say, oh my god. Never out of my brain. Hey, and I never said a bitch before. How the fuck she know my name? She say Money Buddha hello. I look at her and say, hey. She said Money Buddha hello. Getting money, I'm the man. Getting money, nigga. Oh yeah, this one too, man. I'm giving y'all some secret dreams right now. Nigga got it. Oh, I remember when she ain't want me back, I was pop. I'm just gonna leave that there too, man. We just putting the vision board together. Back up on the block before I had locks and rock star or Dewey sell rocks. Nigga, fuck is you talking? Cause that little bitch be fucking with clowns. Yeah, yeah, let's go. I can switch my swag once, switch my flow. Hey, I can get this shit one more time. I can get this shit one more go. Hey, I get the vision to say, hey, I get that bitch in the grade. Hey, I don't that nigga to think on the little bit, but she gonna treat me like Dre. Nigga, man, it's a light space. Come on, my bitch, it's a light. Hey, come on, my man, what you saying? And your girlfriend like my drip. Happy birthday to that bitch. You're the one that sucks my dick. Triple S got double. And you know I cannot slip. Frank Miller made call on my wrist. Got it. My wrist. White diamonds, them shits is pink. Now go ahead and go get a mink. Man, goddamn, the Lord, man, I don't even want, man. Y'all be trying to hype the Buddha up, man. I ain't gonna let y'all even play. I ain't gonna let y'all play with my fucking money like that. Oh, I like that. I like NYC by that. That's a buy, boys. Motherfucking looking like a nice little time to buy so I can own up all your company. See, what they do is they take it all down. Then they make it shit real way down. Even though your shit really up here. But nobody can see it up there. They only think that it should be here. But we all about to buy right here. And we gonna see you niggas, man, next year. And that nigga buy low niggas how high. So you wanna look around for the shit that's already really down low. Nigga, money boo doo, do you know? Psh, nigga, boy, I'm a millionaire, bro. Hey, nigga, boy, you should have watched my show. Hey, eat man, nigga, for sure. And the mixtape banging on, bro. Hey, I got big niggas running on the door. Hey, and I fuck around and steal your hoe, nigga. And take it right back to the show. Show you how to make the flowers grow, nigga. Show you how to make the trees grow, nigga. And bring back the squirrels and the bees, bro. And the deers and the fucking rainbow. And the snow and the babies in the low. You better play, dog, go, dog. Let me stop, boy. Let me stop. I'm on a motherfucker. Start another track on you, nigga. White diamonds and just pink. Nigga said, nigga, you should have came seen my show. Take the nigga, man, seen the UFO. Nigga, these niggas ain't even seen a UFO. You should be outside a little bit, bro. Nigga, look up, nigga, you don't know. Nigga, man, there's a whole galaxy out here, bro, nigga, and they trying to play around with the money, yo. Nigga, Bunny Buddha, how you doing, Nigga, shouts out to all the scrappers, bro. Hey, we got 100 out of 50s a year, hey. And niggas about to be another 1,000 more. Hey, you know when we hit 1,000, they start to let a nigga get paid for this shit now. You know that, right? You know we almost there. You know we getting out of the amateur league. We getting in the major. Last year, last year minor. This year, major. Shouts out to J Money. They shot my nigga J Money. Man, pork it with the pork finder. Cat beater, egg beater, but I can't find them. Who he talking about? White girl, Miley Cyrus. Ooh, Krispy Kreme. Oh, yes. Buy it. I've been looking for an entry on Krispy. Oh, buy Krispy Kreme. Oh, yes. I've been looking for an entry point on Krispy Kreme so bad. Oh, I've been waiting for this. This is $1 billion company. I read an article. They said this shit. Is Krispy Kreme supposed to do $100 billion in donut sales? The company is worth like $100 billion, bro. I guess that's why I said $10 a share. That'll be about 100. That'd be, but no, that wouldn't be that neat. Nah, something ain't adding up. That'd be like 10 million or 1 billion, something like that. I forgot how to look. I ain't done that calculation in a half second. It'll come to me one second. The evaluation, so something. If it's $1, it's only worth what is it? Every dollar is like a 100 million, a million or something. So that's $1 billion. Something it is right there. It's like $1 billion, $10 a share. That means it's $1 billion company. See what I mean? So that would be right. Cause I seen a fucking article and it was right below our line, below the mixtape distant line, and you see it starting to develop support. Man, I don't even want to look. Krispy Kreme. Krispy Kreme is another shooter, man. Krispy motherfucking Kreme. Nigga, everybody at all-time lows trying to buy a nigga at an all-time low. What is you doing, nigga? I'm at an all-time high. Nigga, boy, we trying to cook up a motherfucking fish fry. Nigga, baby girl said she about thigh high. Hold on, let me see something. Oh, yeah, the price was going up. I see. Nigga got a motherfucking on the price. Nigga, let me see what's going on with the price. Nigga, man, you can get something nice. Oh yeah, nigga, here you go, boy. Get you something nice. Get your PRSRO, boy. Don't say money Buddha ain't do nothing for the people. Nigga, boy, you take all of your money. You get it for 73 cents a share. Multiply whatever you got times 17 3 cents a share. Nigga, that's 0.73, nigga, boy. Don't forget to motherfucker multiply and divide. Nigga, please excuse my dear Aunt Sally. Nigga, boy, big mathematics shit, nigga, grab it. The way they treating us Americans is savage. Mm-hmm. Trying to send a nigga war away. Nigga, money Buddha, man, nigga, wait. I think I might just take this play. See, man, call me up if I don't say great. Nigga, come, nigga, shoot me a bottle. When I make you a millionaire, boy, better shoot me a car. You know money Buddha like red. If I make you a millionaire, boy, I need a red Ferrari. I'm giving y'all niggas real motherfucking gems. You see, I'm motherfucking in that gym. I'm getting motherfucking goddamn slim. Nigga, bitch didn't scratch my rims. Nigga hit a nigga, man, for the glint. If he shit a nigga, boy, he won't miss. Hey, nigga, boy, nigga, I'm all in the bitch. Nigga, YouTube millionaire shit. Nigga, like and subscribe my shit. Nigga, thumbs up notifications. Nigga, bodies all in them basements. Nigga, Joe Biden keep fucking hating. I think it's about time to buy this goddamn shit. I like this company. This is a good one. It's a good one. I like what I seen right there. Nigga, should we get a China play? China play. Shing chong ching chong bong bong bong. I might have to get it. I might have to upgrade, man. They trying to get some new subscribers. They trying to pay some bills. It's a new year. I can dig it. Oh, man. What the fuck happened to Jay-Z? Sing song, sing song, sing song. This one about to go up, nigga. Y'all better buy this one. This one got some funky action. I like them when they get funky. I don't even know what this means. That mean I want to be a part of it. When in doubt, nigga, get a part of the money, nigga. It's better to be in it than to not be in it. It's better to have love than to have lost, than to never have love for all, at all, nigga. Shakespeare, nigga. Shakespeare shit, nigga. Shakespeare shit, nigga. Sony digital. Imagine that digital. Oh yeah, I like that. I'm liking everything in this section right now. I'm liking everything in this section. I wish I. Oh, that's what I'm gonna do. I was about to say I wish I could save this shit, but that's what I'm gonna start recording. This show gonna be. I'm gonna start using my own show for it. Cause I don't be remember all this shit. I'm like, man, where's my watch list that I had? Then I'm just gonna watch the replay. And I mean, so I need to do a good job bringing up some good stalks. Stalks. Don't you want some stalks? Stalks. Buy low, sell high stalks. Don't you want some stalks? Damn, that's it? Oh, here's the one. This the one right here. This is the one right here. Buy this company right here. This the damn lithium people. I've been wanting this company bad too, man. I've been wanting to own these people bad, bro. These every stock that was on this list was damn near stocks that I've been fucking eyeballing over the fence. You know what I mean? Being a little peeping Tom. I've been in that motherfucker. I've been peeping Toming the shit out of these fucking stocks. And they keep coming up talking to me. That letting me know. That's letting me know these are the ones, bro. Now is the time, bro. It's the first day of the market. 5 in the morning, bro. You gotta be early. The early bird gets the worm, Reggie. Maggie. I want to play some Call of Duty, though. Might play me some Call of Duty while I'm over here. Call of Duty. Call fucking Duty. Call of Duty. I gotta put some water in my snake's cage. Call of Duty. Oh man, I want this stock. I don't even want to look at it. That's like each one of these ones I ain't even want, but I can't even look. I need all of that. They got the Blackstone too. Oh man, they got some shooters right now for sale. Everything going for sale, going out of biz. Jugging around the city, you know what it is. Breadwinner Bennett, put that on the wrist. Everything on sale, going out of biz. Nigga, dog, everything on sale, dog, is going out of biz. Jugging around the city, you know what it is. Breadwinner Bennett, put that on the wrist. I got two. Wow. Bunny Buddha show is off of the road. It's 5 in the morning. Bro, it's 5:20, bitch, and I cannot stop. Think I need to? Mo. I'm jumping, I'm ring. I'm a little sleepy, though. I see what you gotta be sleepy. I'm up early sleepy. I probably take me a nap, though. Don't tell nobody. Don't tell nobody Money Buddha gonna sneak him a nap in before the bell ring. Well, I'll probably catch the bell in bed. I'm gonna catch the bell in bed. I'm gonna catch that bell in bed. I'm up early, bitch. It's Will I Am and Brittany, bitch. Man, I like this shit. Let me just run through the list right quick from my channel. Dog, all these fucking stocks look so sexy. Any one of these ones you could just dump cash into. No, not any one. Do your due diligence. That's not a good. That one is the one. I don't want to say nothing. I ain't saying nothing. Right there. Buy it. See how it says credit service, but thought it was Bitcoin. Fucking sums up, bitches. Medical devices. I'm excited for the market to open. I might be up. I might stay up until the pre-market too, nigga. Then I'll take my nap when the pre-market shuffle finishes. I'm gonna fucking. I'm gonna lay my ass down. I'm surprised I ain't see the some reefer. Surprised I ain't see reefer out there. What's up, babe? Fucking snake making noises like a grown ass man. This is it. And then, nigga, you gotta start paying rent soon, nigga. Your ass grown, boy. Nigga, you shitting, nigga. You a grown ass man, nigga. I like these people. I like. Can I buy you? Yes. I like flooring. I like flooring. Yes. You need floors. I'm fucking with that Krispy Kreme play like shit. I don't know who these food people are, B&G Foods, but I'm feeling like they're a play too. That's a play. Yeah. It's a buy right now. It says whiners worried about hardship. You see what I'm saying, man? These old fucks running the country to the ground, then got a nerd to fucker. Be talking shit, saying nigga whining. Nigga whining when you fucking got billions and shit. You done run this bitch to the ground. Please believe, when I'm a billionaire, trillionaire nigga, every day we throw flower parties, which means we go out and we plant flowers, man, for the community. Put some trees in the community, nigga. Leave the world a better. But you don't see them niggas doing nothing like that. When's the last time these two pieces of shit planted a tree? All that money they got, they ain't planted a goddamn tree yet. Go save the rainforest. Fucking run your mouth, Charlie Munger. Charlie Munger, take his pussy whining, worried, hardship hating ass with Warren Buffett dick sucking ass and go save the trees, nigga. I don't even want to read no article about you pussy niggas. Tell them niggas. You get no airtime. What crazy Joe talking about? Sleepy Joe. They ain't seen nothing yet. President has accused oil companies of war profiting and threatening them with a windfall tax. But will it help with gas prices? But will it help with gas prices and inflation? That's crazy how they did it. You gotta be careful with this news. That should be trying to steer your emotions. Like of scorching inflation, Russia and Ukraine, major gas companies like Chevron, ExxonMobil, ranking profits. Ranking profits. I was thinking. In November, days before the midterm election, Biden launched an attack on the industry, calling them prophets of war. War, I tell you, war. War. What war? Yeah, bro, because look, that's what we were just reading in the other article. He's trying to say it undermines investment confidence. Spokesman Charles Nolly told the Financial Times the windfall profit tax. Financial Times reported the lawsuit. Exxon boosts its quarterly dividend. Uh-oh, buy you some Exxon. What Exxon shooting for? Being that all this shit is happening, nigga. Damn, Exxon is $110 a share. Are you fucking kidding me, bro? That shit was like $50, bro. It fucking doubled, bro. No way, bro. Wow, bro. These niggas are fucking making a killing while they're killing all you people, bro. They're destroying the planet and profits ain't never been better. That's what the devil want, man. That way you blinded. You're blinded by the light. Come on, can I see the chart? Shitty ass Bazinga. What the fuck is trade view? Oh, get on down. So you gotta be careful, man. Not every. There we go. I'm about to say not every Oh yeah, they ain't trying to let you see that chart on Benzinga. Don't even use Benzinga. They should scam. Benzinga a scam. Don't use Benzinga. Them niggas are scammers out there. Them niggas are scammers. Yeah, that's what I'm saying. Why can't I get a year to date? Man, they've been at all time highs. Damn, they was at 40. Damn, they was at $30 a share, bro. When I seen them, they was at 50. Yep, see, that's my birthday. Right there, man. That motherfucking the shit been off to the races, nigga. It's been off to the races, nigga. Sometimes you gotta watch the winners shoot out of your hands. Good time to go short. All time highs, time to put a short. Even though they just bumped up the dividend. Nigga getting man dividend and the war don't ain't gonna be ending no time soon. Nigga, man, Exxon about to fucking boom. It's about to go up to 300 fucking soon, nigga. Goddamn. And they gonna have to do a split. They're gonna do a split to kill the price so y'all, you know what I mean? Cause too many niggas making money. Damn, Chevron. Oh my god, Chevron is at a how the fuck did they making this much money? Nigga, they up another. Oh, this is Wall Street. Them dirty ass fucking Wall Street niggas are so fucking dirty, bro. God damn, Wall Street is dirty. Damn. God damn. Bro, how the fuck, man, I don't even, oh. Wall Street is fucking dirty. They made $100 billion in profits. In profits, bro. Keyword profits. So that they keep making you think that it costs $100 billion to run the operation, bro. It might only cost them niggas $20 million, bro. And y'all the niggas, man. But y'all be the first one trying to always hate on a regular person. But y'all be letting these giant corporations just go out of control and do whatever they want to do. But then when the motherfucker tell you like and subscribe, you act like that's I can't fade it. You can't fade it, but you didn't gave these demons 100 billion. Shame on all you niggas. Shame. Shame. Nah, look, Chevron. Did they just say Chevron? Yep. Come on, bro. They trying to say Chevron is the best Jones. Oh wow, they trying to get y'all to buy that shit and pile on in, cause they need some. They need to start selling. And they slick. Start talking about dividends and shit, knowing they about to step out. Oh my god. Ay ay ay. You got what I need, and you see. Let me get inside you. I ain't got nothing good on there. Let me get inside you. Let me get inside you, dear. Let me get inside you.
What's up, guys? Yeah, what up? You all join? Yeah, we can join. Don't do it. I can't see it. Hey, send him an invite. I did. Hey, let's take this game start. Yeah. Hey, what's up, bro? There's a safe over there, too, if you guys want to do that. I'm probably there. Probably. Let me take this vehicle. You fucking fucker. Thanks for not trying to shoot us. Who the fuck's still alive? Yeah, I tried to go one more behind this. What the fuck is it about? He's like, caught us with our hands up. Oh, yeah, I've been taken out a couple times by, like, in the squad. Especially because I'm on, like, I think I'm on the 4 streak right now. Oh, yeah. Shit, I just had the craziest game of my life. We had like fucking, we had a full squad, and then we ran into like the final evac, and there was like another like double squad, and we were just like around each other. That's what happened to me. The squad took me out, man. I was like the final squad in the last match, and they took us out. Wait, were you wearing like a, what the fuck's his name, a Koenig skin or some shit? No, I was sitting in a chopper. I was just thrown in a chopper, and they ran in and took me out. While my other teammates were like sitting prone in the chopper. I'm like, there's 6 of them. I don't fucking know. Fuck you guys, I ain't dying.
Yeah, well, this broke. That's why I was struggling. I mean, I could put that on there. I got other hats here.
We also wanted to ask you about your outrageous finance predictions for the new year. One response caught our eye. Ethereum passes Bitcoin in market cap value. Jared, this is an interesting pick to me, and I think my takeaway overall from what we've seen play out in crypto is the fact that Bitcoin and Ethereum have been relatively resilient when you think about all of the implosions, the chaos, the crisis that has really been swept up within that sector.
Yeah, it's only down about 65%. You compare that with almost
I thought it would be
100%
much worse.
for some of the other tokens there. I wouldn't be surprised if that actually happens. I don't know if it's going to happen this year, but I think in 2 or 3 years, Ethereum just has more bigger base case use. So I do think that eventually happens.
I was going to say, go ahead. You take it away first.
So here's Drumble. Guess what my prediction for 2023 is? It regards the Federal Reserve. And here's the Federal Reserve's balance sheet. It's coming off of the highs of $9 trillion. And right now it sits at about $8.5 trillion. I think the Fed actually blinks. They pivot before it reaches $8 trillion. So based on current runoff, about 100 billion or 85 Bs per month, that's going to take until May, June. I think the Fed only has about 6 months before it cracks under the weight of this contraction.
All right, my prediction is for Peloton. I think Peloton's going to be a takeover target. Who is going to buy them? We've been talking about this year. I think it's going to be Apple. We know Apple has been placing a bigger emphasis, a larger emphasis on the fitness portion of their business. They see growth potential there. Given Peloton's performance since they hit that high during the pandemic, they're looking for an attractive. I don't know. We'll see. All right, Jared, toast to you. Happy New Year. Happy New Year to all of you guys out there. We will see you in the new year. We hope you have a wonderful, wonderful New Year.
The market's hoping to shake off 2022's gloom with investors looking to optimism in China's reopening and a less hawkish Fed. Joining us now with more, we've got John Solfus, who is the Oppenheimer Chief Investment Strategist. John, great to have you here with us today. You look out into 2023 and you think about some of the things that we hope to leave behind in 2022. Which of those factors do you think will still loom large as we move into next year, though?
Well, thanks for having me on the show. Really, it's great to be here on Yahoo Finance. Would have to say, when we look at the picture here, the risks remain. Things like COVID, China policy towards COVID, issues related to Russia's incursion into Ukraine and how that will turn out. So when we consider that, we've got to think that with the Fed still in a rate hike cycle, plenty of uncertainty remains on the table. That said, we think a lot of this has been priced into the market this year. We'd have to suggest that indeed the market has been oversold, whether it's the NASDAQ, whether it's the S&P 500, or the small caps. So we would have to think that next year, 2023, is likely to be a better year. I think the Fed's going to keep raising, okay, but we think the adjustments will be modest. We're not looking for a pivot. We're not looking for a pause, at least through the first quarter into the second quarter. But we do think that companies have shown that they can be highly resilient in challenging markets since the financial crisis, through the pandemic, and thus far in these rallies that we see.
Hey, John, it's Julie here. You tend to be, I would say, more optimistic of the folks that we talk to. And I'm curious, as you look ahead to next year, since you're already looking at a less worse year, not like gangbusters, but less worse, what could go even better, right? And you list some of these upside risks in your look ahead note, but what to you is potentially the most likely, the thing that you'll be watching most closely?
Well, we'd have to say that the consumer will likely prove to be more resilient as there's still, based on the Jones Index, plenty of jobs for those who are unemployed to consider, at the very least. And in the meantime, consumers are keeping spending, even though they're relying more on credit cards. The reality is that the consumer remain, whether it's for, for experiential joy or for buying things, the American consumer remains positive related to spending, and I think has a fairly realistic view in terms of inflation. I also think that the Fed will once again be proven to be successful ultimately. It's prone to make mistakes, but ultimately the Fed is the arbiter in terms of setting interest rates via its benchmark rate, monetary policy. You can see it in those housing numbers that we saw earlier this week, and the numbers today that you were just talking about. They're beginning to have a genuine effect on this inflation that has been at 40-year highs.
John, if we get stagflation next year and no recession, does the S&P 500, let's single that out, recoup all its losses from this year and perhaps even more?
Well, the stagflation question is when we'll have to see what happens with the job market in terms of how that really comes out. But based on what we've seen over the last 15, 20 years, and even longer, we publish within our weekly piece and our monthly chart book the effects on the S&P 500's performance and interest rates, not only market interest rates, but also Fed policy. We have to think that there's a real good chance that we are going to see at least somewhat of what we would call a do-over year. I don't know if it's going to look like 2019. Remember, in 2018, the Bears ruled in the fourth quarter. They thought first quarter was going to be terrible. Boy, were they wrong. And the markets came back powerfully that year through the whole year. So we think you have to be, if anything, we think upside risk is probably greater than downside risk here. The biggest problem for the bears is they tend to project whatever is negative today, they project it forward into infinity. And, the world and cycles are what they are. Things can change. Who would ever thought that President Xi would cut out the zero COVID policy so fast? How long that lasts, well, of course, that's up to President Xi.
So, John, all these factors considered, what's your top idea for 2023? What is the area that, for investors, they've heard about how defensive they needed to be in 2022, in 2023, where would you say that they should perhaps kind of pivot their attention to?
The overcall still remains buy growthier value and garpier growth. So we like, when it comes to technology, we think tech has been grossly abused this year. You want to own those companies that are their services or their products are deeply embedded in the lives of the business as well as the consumer. A lot of those stocks are deeply on sale, and some of them even pay dividends, modest dividends, and sometimes even better dividends. We continue to like chips. Last I looked, the chips were still doing well from the October 12th lows, up double digits. I think about 12% is what I recall off the top of my head. Last I checked my screen this morning. And would have to say, you want to own consumer discretionary. Don't bet against the U.S. consumer. When times are flush, they spend like sailors on leave after a long tour of duty at sea. But when times are tough, the American consumer validates their work and their existence by shopping. They'll just move to private label goods, discount stores, or what have you. And so we think, look at the consumer, technology, and of course we continue. We've been adding for years now exposure to industrials. The industrial sector looks like a great place to be, not only from a defense position, but also power generation, as well as aerospace, both commercial and defense. And we have to think that with most of home appliances now connected to, or many connected to the Internet of Things, it's a good space to be in. And financials still looking very cheap here. If we can get away from all this fear about the pending recession that everybody is certain about, we can probably see the financials have another period of a nice bounce.
John, just real quickly here, where do you stand on the great bond comeback of 2023 that everybody seems to be talking about?
Julie, I think this is central to it. That what all the fuss and muss about this that happened this year was it was the end of free money, is what the Fed was saying. We had easy money during the financial crisis and coming out of it. We went to free money in the pandemic. That's not good. Bond issuers are beginning to pay for the privilege of borrowing money, giving something to bond buyers for the risks they take related to credit, callability, and the default risk. And so we've got to say, I don't know if it's a 60-40 play, but maybe a 70-30, 70-25 with fixed income, at the very least, a 15 to 18% exposure in a model that we follow.
John, always great to catch up with you. Happy New Year to you. It's good to talk outlook with you. John Silfus is Oppenheimer Chief Investment Strategist. Thanks.
Thank you.
All things good.
Switching gears, the Fed might be looking to labor data indications that its hawkish policy is working. The market may be underestimating its resolve to continue hawkishness. Let's look ahead to Fed policy and markets in 2023. Joining us with more, we've got Thomas Simons, who's the Jefferies Senior Money Market Economist. Thanks so much for joining us here this morning. First, when you think about what the Fed would be looking to see and the trend and how long that trend would need to be locked in order for any type of policy pivot, what comes to mind for you? What type of extent or timeline would that even look like?
Yeah, so I think the key right now is something that they've been talking about recently as a component of the inflation data, which is core services. Obviously we've seen quite a slowdown in the headline inflation data recently. Most of that has been driven by used car prices falling, a couple of different things that really rose to outsized levels in 2022, they're starting to roll over. And when you look at those headline levels and you annualize them, a lot of people are saying, hey, the Fed has done a lot of work. They've already gotten inflation down to levels that are close to the 2% target if it stays there for the next 12 months. But really, what the Fed is saying is like, okay, we're happy with that, but there's this other sticky component of inflation that hasn't come down yet, and these are the most labor market intensive sectors as well. So as we continue to go through this period of time where labor is really difficult to find, the labor market remains very, very tight. And wages continue to be, seeing some continued upward pressure. The Fed is going to continue to be concerned about that inflation component, and I think that that's the key factor that really isn't appreciated very much by the market just yet. As you mentioned, there are, I think expectations that the Fed is going to pivot or slow down at some point here, very soon. We think that there's still at least a couple more rate hikes here before they're done.
Thomas, what's your boldest economic prediction for next year?
Like one that has a reasonable chance of coming true, I suppose.
One that might surprise folks.
Okay, so I think I'm not sure if this is a huge surprise, given that the Fed has, more or less communicated this.
These niggas don't know what they talking about.
The Fed funds rate target is going to be over 5% from March all the way through the end of the year and into 2024 as well.
And so, Thomas, when we think about what parts of the consumer experience right now are going to change drastically, and where the consumer, within what the reality of the economy may look like in 2023, where they net out, I mean, what type of impact should they be bracing for?
Well, it's actually interesting. It's one of the things that has really propped up the consumer throughout this cycle, which is that the consumer is far less interest rate sensitive than it had been in previous cycles. So where previous cycles consumption had been really fueled by a lot of debt, obviously higher interest rates is going to affect consumer demand for borrowing. But in this cycle, really what they've been working through is all this accumulated savings that they've, accumulated through whether it was stimulus back in 2020 or 2021, but also the continued wage gains through the last couple of years as well. We still think that there's some more ammunition on those consumer balance sheets, so as interest rates rise here, it won't be quite as painful for consumers as it would have been in the past. The issue is going to be whether or not the labor market can hold up through the entire year. We do expect that into Q1 we're going to see some pretty significant margin compression across earnings reports that from big businesses, and eventually as they go through cost cutting, that is going to lead to layoffs and obviously a higher unemployment rate and lower wage pressure. So I think the consumer starts to feel that around the middle of the year. That's when the tightening is really going to start to take hold, and we are going to see sort of people on the fringes of the labor market really start to suffer. But it's not something where we're going to see a big rollover, a big collapse that is akin to unemployment rate spikes that we've seen in the most recent two cycles anyway.
Is the economy shedding jobs by the middle of next year?
I believe so, yes. I don't think that we've seen it yet. It's interesting to me.
See how they be talking, man? These niggas that they gonna shed jobs. We already been shedding jobs. Tell that to all the people who are homeless right now,
publicly traded companies
who lost their
But if
jobs.
you look at things like the initial jobless claims data, you don't really see much evidence of the layoffs coming just yet. So I do think that there's a few more months where businesses struggle with this idea that they had just worked so hard to find these people to fill open positions, and they're going to delay the layoffs as long as they can.
See,
But
come on.
into the middle of 2023,
And he says he's okay with that, bro. Look at these fucking pieces of shit. He should drop dead just for saying that shit. Like, dawg, listen to what he just said. They destroyed America. They destroyed commerce. They've destroyed your ability to do commerce. They've destroyed small business. Then they lied to y'all, said, okay, come back online. We're sorry. COVID, you took your vaccine. Everything gonna be okay. Now he's saying that they're gonna have to destroy all that shit. And now the people who you just had to hire, you gotta fire. He needs to get fired. He needs to be homeless, sucking dick for crack in Philadelphia. And then I guarantee he won't want nobody getting fired. Pussy ass fucking faggot ass motherfucker, bro. This is why I said, let's listen to these faggots. I want you all to hear how they're talking, how they don't give a fuck about you, and you pussy motherfuckers acting like you a part of these motherfuckers and you too cute to subscribe. When looking, come on, you better support. And not just me, all these people out here. You better support all your local people, bro. You better get active out here.
Therefore, those businesses will still have demand to fill positions that they can't fill at the moment. And I do think that that's going to continue to prop up prices as well, because if those businesses are struggling with costs and they can't let go of labor because they would just not be able to meet demand that's still there, the only way that they can address that is through further price increases. And again, this is
so they can save their business.
For services.
You fucking cunt.
Let's take a look at the markets overall. This is, by the way, the third day of the Santa Claus rally. So I'm going to show you some 3-day charts of the Dow, which is down today by about 2/3 of a percent. Basically break even over the last 3 days. Here's the NASDAQ. It's down 1% today, or 2% plus over the last 3 days. And the S&P 500 down just marginally, just a little bit more than 0.5%. But usually what happens this time of year is nothing really matters. You have a market melt up, you have some kind of drift, and headlines don't seem to matter as much. But what's happening this year is all the fringe sectors, all those sectors that got beaten down the most this year, those are getting hammered yet again. So we can see today energy is on the downside, down over 1.5%, followed by communication services and tech, all of those down more than 1%. And a lot of that action is not only in the mega caps. Let's take a look at those first. But you can see lots and lots of red here. I guess a couple standouts. We got Tesla. Finally, that's up about 2%, stopping, what is that, a 7 or 8 day slide here. Got to keep tabs on that. But just checking in on some of the market leaders, lots of red, and a dark red down there stands out as well. KWEB, we got to take a look at these Chinese internet stocks. Because those have taken a major drubbing. However, over the last month, those are some of the names that have gotten a lot of love. So back with my analysis on what got hammered this year is getting hammered even more. Just take a look at what's happened with the meme stocks. This is today. Here's the last 5 days. Coinbase down 7%. Rocket Companies down 12%. We have AMC down as well. GameStop, some of those OG names. My point is, Shauna, the fringe markets here are seeing no investor love, and this is antithetical to what we see this time of year usually. So all of this portends, if we don't get that Santa Claus rally, that portends a negative setup for the following year. Doesn't mean it has to come true, but usually this time of year, we're just sipping our coffee and reading the paper.
I know, investors really holding out hope. Maybe the final hour trading today and the final 2 trading days of the year, maybe we'll see some of that momentum turn just to be a little bit optimistic here.
Look at that, how they destroyed y'all Christmas. They destroyed Christmas. Fucking scammers. Markets were dastardly through Christmas.
Here to talk about the year review and what to expect for next year is Investopedia's editor-in-chief, Caleb Silver. Caleb, good to see you in the flesh here at Yahoo Finance HQ. Love your terms. One that stuck to me is cold storage. I guess no surprise given everything that is happening in crypto.
Cold storage was one of the top 10 search terms of the year in terms of traffic outside of its normal range.
Niggas didn't know what cold storage was? Man, how the fuck y'all didn't know? Then you buy the crypto, you take it and you put it in a vault. That's why they call it a crypto vault. Because it's called you don't leave it on your damn brokerage account. It's not Wall Street. These people aren't reputable. You use them as an exchange. You take your $20, you buy your Bitcoin, you take that $20 worth of Bitcoin, and you put it in your crypto vault. And you can't lose that vault. That's why everybody, when you see them stories when they say, oh, somebody lost their computer and they had a $20 million worth of Bitcoin on the computer, you're like, whoa, because the digital asset is your asset. Stop leaving your assets in the care. That's the whole point of why we had a decentralized banking system with this crypto shit, is for this shit not to happen. So you stop leaving your fucking money on a centralized source, which is susceptible to failure because it's a single point failure zone. Fucking morons.
That's a good one to look up. What about recession? We've been talking about recession, I think, since January of this year. Are people still searching for that as much as they were 6 months ago?
Absolutely. And recession is the #1 concern among our readers in terms of what they're worried about for 2023. They got a little bit warmer to stocks towards the end of the year with a little rally in November. December didn't do much for that. But people have been worrying about a recession. But as you guys know, recessions, it's a big economic term. There are indicators, but it's also very personal. So for a lot of folks, they feel like they've been in a recession since 2020, since the onset of the pandemic, especially small businesses and lower income folks
we know that's going to be popular in 2023.
Okay, and so
Yo, that's
we
the
have
first.
essentially
Look how they
seen
just said
many
that.
different
Some
variants.
people feel like they've been in a recession
This
since
one,
2020 because they
much
have
like
been.
we're coming
They
out
don't
of the
feel.
pandemic, you've got
It's not a
global,
feeling.
uncertainty continuing to move forward, even as we were talking about a pact between Russia and China that continues to emerge. So, with the reality of what we could see on a continued basis in the bear markets of our time, and given the confluence of factors that we have right now, where is that stacking up among some of your readers?
Yeah, they're worried about it. At the same time, they want to be opportunistic. For a lot of younger investors who came into the market in the last couple of years, or even over the past decade, they've never seen a dynamic like this. Rising interest rates, sticky high inflation. Used to be able to throw a dart at the dartboard and hit any growth stock and make some money on it. You can't do that anymore. You got to be smarter. You got to focus on fundamentals. Boring guys is back. You're getting some yield out of the bank right now. You're getting yield in money markets, value stocks. It's the tortoise versus the hare in 2023. You know, a lot of folks are going to be thinking about that portfolio migration to the slower moving, more steady fundamental stocks.
Do you think investors just learned something? What did they learn this year, Caleb? They've been battered on tech stocks that only in the past have gone up. I mean, what are some of the top takeaways for investors this year?
Yeah, I think a lot of it is people are figuring out what their sleep factor is. What is the losses they're comfortable with holding on to before they capitulate? So a lot of folks have had to think, do I sell into a downturn? Do I sell into a bear market? A lot of our portfolios, a lot of folks were invested in growth. Do I sell out of this now and transition? So they were learning about what to do next and how to position themselves. But you know, there's always some opportunistic investors looking for yield, especially when everyone gets scared. A lot of people get very greedy, so we're going to be watching for that.
Now, you would imagine it would be very helpful for them to have more financial literacy knowledge early on in their career. They will have a lot of stuff coming at them. What are you working at? Investopedia.
Amen to that. We believe in financial literacy at every age, but we're trying to push it younger and younger. So we're working with public schools across the country to try to develop curriculum to really help people not just invest, but understand money writ large. We don't learn that stuff at all pretty much in high school. Now it's required in 26 states, but we really don't learn the basics. Guess what happens? We go to college, we get the credit card offer. Some of us graduate with student debt, about $35,000 on average. The first job's not going to help you pay that down. So we need to teach people the fundamentals at an early age so that they're ready for their money lives, because it's a long journey, as you know.
Yeah.
Investopedia Editor-in-Chief Caleb Silver, always a pleasure to see you, and great getting some of the insights from the platform. I know you're a skateboarder, so we've got a couple 50-degree days coming up here in New York City. We got to get another check-in from the skate park out there too.
Roll on.
Yes.
Here's the opening bell. Looks like we've got, not saying exactly who that is over at the opening bell. Make-A-Wish Foundation. And it looks like stocks are opening up. I'm not sure if they're mixed, but we did have a mixed board going. Yes, it looks like the S&P 500 down just about 0.2%, Dow down 0.25%, and the NASDAQ down about 0.2%. And let's get over to Julie Hyman standing by at the Yahoo Finance Interactive.
Here I am, and indeed we are seeing this mixed picture at the opening bell. Even the S&P is actually opening up a little bit lower, which the futures were not pointing in that direction. The NASDAQ kind of following on the trend that we have seen so far this year, where it is the worst performer of the three major averages. And it definitely has been interesting this year, right, that we have seen this underperformance of the NASDAQ pretty dramatically, down 33% now year to date, where we have seen around a 19% pullback for the S&P 500, for example, year to date. And as we get underway this morning, I also want to take a look at what's happening with the various sectors within the S&P 500. Energy and materials doing the best here this morning, and then we've got consumer discretionary and tech. So sort of cyclicals doing poorly, although you would consider energy a cyclical too. But that's what we're seeing. Also want to take a look at the NASDAQ specifically, since that is the underperformer, and take a look at the NASDAQ 100. There we go here. Tesla, as we just pointed out a moment ago, dark red here, down 4%. And we were just talking about its year-to-date performance as well. So now it's down 66.5% for the year-to-date for Tesla. If you look elsewhere here, we do have the likes of Amazon and Alphabet and Microsoft and Apple all lower, but their declines are much more muted. And there's actually quite a bit of green on the screen here for the NASDAQ. So we'll see how that shakes out as we get further into the session here. But even as we get out of the gate here, now the NASDAQ composite is down 0.4%, Jared.
Wow, Tesla down 2/3 this year alone.
We think that volatility is something that's here to stay. And that's for a number of reasons. First of all, what's happening right now as we continue to uh, do this policy with the Fed of slowing down the economy and tightening, we're in this sort of upside down world where bad news is good news. And so we first see market reaction in one direction. When that bad news comes through, that means the Fed may not have to be more aggressive. But on the other hand, we realize that that means the economy is actually slowing. It means consumers are getting pinched. It means that we're cramping growth. And so that leads to continued trading volatility. We've also seen lots of trading volatility in the options market as more and more individual or retail investors are using options and option strategies in addition to the institutional investors. And so that injects a degree of additional volatility into the system. And then I think the third thing is that there continue to be some very significant and substantial wild cards out there, whether it's policy against sort of Russian sanctions, whether it's oil prices and oil policies, whether it is COVID, which continues to be a wild card. Those things are putting a degree of uncertainty into the market that generally results in volatility. And so we think that there's going to be plenty of that to go around throughout 2023.
Welcome back to Yahoo Finance Live. We're about 8 minutes into today's trading session. Let's get on over to Jared Blickery at the Wi-Fi Interactive for a deeper dive into today's tape this morning.
Yes, well, we got to talk about the energy market because as you were just working your magic there over at the Wi-Fi Interactive, I'm going to go back to the year-to-date look at our sectors. Energy, the only thing in the green, and it is green by a mile, up 57%. And XLE, let me just show you a max chart on this. It's going to go back to the late 90s. Arguably, this is a triple top from the global financial crisis to 2013 and then into this year until XLE crosses this hurdle here. This is roughly 90 to about 110, 120. This is still potentially incredibly strong resistance. So I just want to throw that out there now. But let's go back to, let's actually go to our futures chart here where we see crude oil, that's up about 4%, Brent's up 4.3%, so we'll take a look at WTI. Here is a year-to-date chart of crude, and what stands out to me is it's only up 4%, so basically crude oil round-tripped its entire gains. Now this big spike here in February, March, that was the Russia-Ukraine conflict as it was erupting. That was just kind of out of the blue, and of course more of that could emerge in the new year. Then we had this second spurt up to about 120 on it, and it's been a slow, steady decline ever since. And OPEC Plus just at their last meeting earlier in the month, they left everything the same, so they seem to be happy with the way things are, maybe an equilibrium level in the oil market right now. So this is our energy stock heat map, and we can see Exxon, the biggest of the majors, that's up 79%, huge gains for any kind of company. But number one here is Oxy. I believe that's number one. And here's the year-to-date chart on this. Well, at 115%, by the way, this is the energy stock that Warren Buffett likes the most. Berkshire Hathaway has a huge position there. It's been rumored they might buy the company. To be able to consolidate these gains as we are having the worst year in years for stocks overall is incredibly powerful, but much like some of these other markets, at potential resistance as well. So long-term charts are saying we could be at resistance, but there's huge gains that we have made this year in some of these markets.
Jared Blickery with the technical analysis. Appreciate it.
I just want to start with the recession outlook for 2023 and what you're forecasting, because I don't know about you, with the S&P 500 down more than 20% so far this year, I'm ready to look ahead to 2023.
Yeah, and the data actually looks a lot less recessionary than it did, 3 or 4 months ago. I mean, the big story here is that inflation expectations are falling, which means people are going to spend less money on the things they want to buy, but wages don't look like they're going to fall as much. So for the average consumer, they're going to get a stronger wage increase. The things they buy are going to be going down in price, not going down in price, but aren't going to go up as much as their wages. And yet jobs are really plentiful. And when you add that all together, it means the consumer is stronger. And if the consumer is stronger, the likelihood of a recession in the next 6 months or so is less than everybody thought it would be. And that ultimately is why we had this big jump of a stock market rally since early October. Obviously, December it's rolled over a little bit.
Well, explain that though, Jonathan. I mean, why do you think sentiment shifted so much coming out of that rally that we saw late summer, early fall into where we are now?
Well, it's more than anything else. It's, as like I said, it's this twin issue of the job market being so strong that people are feeling really confident in their ability to make a capital purchase, whether that's remodeling their kitchen or buying a new home or whatever it is. And then the second thing is CPI is expected to fall to 2% roughly this time next year, and that means the market is of the belief that no matter what the Fed says, the likelihood is that the Fed is going to ultimately get closer to their inflation target when we leave 23, and that's a positive, and that's what the market is ultimately fixated on, and I think that's why stocks are going to do pretty well over the next over the next several months.
Jonathan, so do you have a forecast after the S&P 500?
We do. We have a 40-50 forecast, Carol. But I think the more interesting story is that while initially there's going to be this optimism that I just talked about, ultimately, if wages stay high, which is what I also said, the Fed's going to eventually have to get involved and bring that down. So the general public or even investors on Wall Street, I think, are going to be really happy with falling inflation. But the Fed has a longer-term issue with sticky wages, which ultimately is going to prove to be a problem, but probably later in 2023 rather than earlier.
Okay, so given what you've told us and the research that you've done at Credit Suisse of late, give us an understanding of how this kind of translates into what happens to tech stocks in 2023, because 2022 has been a brutal year. And look, if rates stay high, that could be tough for growth stocks.
Yeah, I think a lot of people, Tim, are focused on the idea that tech was down because of interest rates or sentiment, and I don't think it's that at all. They're really having a hard time on the earnings front. I mean, and the story there is pretty simple. When we were, all staying at home because of the pandemic, what do? We bought laptops and we bought tablets and we bought streaming services and we bought home exercise equipment and we did all these things. But when we pulled forward all that activity, what you're left with once the economy opens up, that we start going on vacation and doing other things, and those purchases have a shortfall, and you've seen a real softening in demand for technology, and that has ultimately, and you're seeing that in the chip market, you're seeing that elsewhere, and I think what's going to happen is it probably has another several quarters to go before it runs its course, and that means that earnings are going to be rough again for the next several quarters for tech, and which is one of the reasons why I'm not upgrading the group. We downgraded in early 22, and we're going to leave it there.
Okay, well, so where are the overweight positions? I mean, where do you think people might actually find better opportunities for that price return?
Well, so let me start with what we don't want to do. So I would love to buy tech, but the earnings, like I said, are a problem. And if I don't think there's a recession, you don't want to buy defensive shares. So you don't want to buy consumer staples or healthcare or utilities because they do well if you're going into recession. So the first thing is it forces you into more cyclical parts of the market. My favorite by far is the energy sector.
Even after 2 years of crazy gains and way outperformance, Jonathan, you think that's still a play?
Yeah, and Carol, it's not a look at what was their stock price movement.
Yeah.
Take a look at what the PE is on these energy companies. The reason the stocks are up is because their earnings have been insanely strong. What's probably the most interesting in the last 2 months, when oil prices have generally been falling, the earnings expectations for oil companies have actually been rising. So I think there's a lot of good news on the energy side. And the second area, like I mentioned to you before, was the consumer. We think actually holds up pretty well. So I like the cyclical group in general, which would include industrials, but my two favorite in that area would be energy and consumer.
Hey, just quickly, would you buy airlines? We've been talking a lot about airlines, and Romain was, highlighting that despite everybody saying we're all flying, those stocks are really beaten down. Would you be a buyer of airline stocks?
I would be a buyer in general of travel companies. I mean, there's a very different dynamic in airlines. One of them, which you folks are saying, is why have hotels done so much better, and there's different issues with capacity. But if oil prices do go up, that is a drag on the airlines in a way that it wouldn't be a drag on a hotel. So I'm not sure. I'm not being a consumer analyst. I'm not sure that I have the ability to say, is it restaurants, is it hotels, is it cruises,
Right.
casinos, airlines. But I like the group in general. Yes.
Wall Street's main indexes ended higher on Thursday in a light trading session that was powered by growth stocks. The Dow closed up more than 1%, the S&P gained almost 1.8%, and the Nasdaq jumped nearly 2.6%. In a bad news is good news day for investors, U.S. unemployment data ticked up last week, signaling the Federal Reserve's interest rate hikes might be starting to dent labor market strength in its bid to fight inflation. Rod Von Lipsey is managing director at UBS Private Wealth Management.
Well, today we're seeing a little bit of a relaxation of worries about that heating economy, about employment that's just too strong, and worries that the Fed is going to have to continue to raise rates at a very, very high and really punishing pace for the U.S. economy. So today we're seeing a little bit of relief coming out of those jobs numbers this morning.
All 11 S&P 500 sector indexes rose, with communication service and technology the biggest winners with gains of nearly 3%. Apple, Alphabet, Microsoft, and Amazon, whose shares have been battered in the past few sessions, each gained more than 2.5%. And Tesla shares, which have fallen nearly 70% this year, extended yesterday's gains after Chief Executive Elon Musk told his staff they should not be, quote, bothered by stock market craziness.
Soaring rates, endless Elon, a crypto blow-up, and markets turmoil. These were the year's big stories in business and finance. 54 was the total number of rate hikes this year by major central banks. Policymakers around the world were scrambling to contain soaring inflation, and Federal Reserve Chair Jerome Powell says the battle is far from over.
The historical record cautions strongly against prematurely loosening policy. We will stay the course until the job is done.
$44 billion is how much Elon Musk eventually paid for Twitter. He first bid for the social network in April, then appeared to regret it, only to be forced to go through with the deal months later. Turmoil ensued, with around half of staff let go. Tesla shareholders have their regrets too. The stock is down around 70% this year, partly as investors fret that Musk is too focused on dealing with Twitter. $8 billion is how much customer money was lost by collapsed crypto exchange FTX. That's according to new chief John Ray, who says the firm was brought down by grossly inexperienced bosses.
I've just never seen an utter lack of record keeping. Absolutely no internal controls whatsoever. And of course, this case is then made difficult in that context when you're dealing with technology.
FTX founder Sam Bankman-Fried ended the year under arrest on fraud charges. 140% was the jump in natural gas prices at one point after Russia's invasion of Ukraine. Moscow drastically cut supplies to Europe in retaliation for Western sanctions, driving prices higher and sparking a cost of living crunch in Europe. Prices for other commodities, including oil, wheat, and corn, were also roiled by conflict. And $14 trillion was the total value lost by global stocks. That's put them on track for their second worst year on record. War, inflation, and soaring rates all had investors heading for the hills.
That was a crazy match. My bad I took so long. I literally was playing fucking Call of Duty. We fucking about to extract out of the match and fucking goddamn get fucking killed. Well, I gotta log up and see what's going on with the market. I'll call y'all. We'll be right